All right, so let's begin the show. And today on the show, we'll be talking about NFOs. We are going to talk about the NFOs that were launched in 2023, which have been the innovative ones and which got the investors' attention as well. To discuss more on this today, I'm joined with Aditya Agarwala, Head of Research and Investment, Invest for Edu. Hi, Aditya. Good evening and welcome to the Money Show. How has the year been as far as the launch of NFOs are concerned? Let's just get a recap.
Hi, Kavita. Good afternoon. Good afternoon to all the viewers as well. Oh, it's been a fabulous year, both on the front of NFOs and IPOs. Markets have been buzzing around, and people have welcomed the NFOs as well. But slightly lower as compared to 2022, I guess, but very marginal. I guess 215 to about 220 NFOs have come out. Few are still lined up at their live at the moment. But overall, the response has been phenomenally well. And this year, what is remarkable, Kavita, is we have seen a slew of sectoral and thematic funds which have seen a new launch, and there's been a good participation as far as the response is concerned from most of the investors, and market participants have welcomed them with open arms, and they've seen good response. So about 45 to about 44 NFOs have seen which are purely based on sectoral funds. So that's a huge number.
You're saying the focus has been, or the good response, if we talk about that, sectoral and thematic has taken the way away, and 44, 40, 45 NFOs which have seen keen interest from the investors. But then, what, according to you, has been the largest NFO collection?
So I have not tracked the exact numbers of largest NFO collection, Kavita, but I guess the response has been phenomenal, which is seen by the numbers of mutual funds that we get every month. So the number has been phenomenally large if we talk about the NFO infusion as far as 2023 is concerned.
So let's just talk about the sectors and thematic NFOs that were launched and have got good response. Top 5, according to you.
So just a word of caution before we talk about the top sectoral or thematic funds. You should only invest in these thematic and sectoral funds if you understand and the sectors and the cycle of the businesses that you are investing in, because these funds take exposure in specific sectors and stocks, and which participate during the economic turnarounds, an upturn and a downturn. And if you are fully aware and confident about the fact that what you are buying suits your risk profile, and then at the moment will give you an alpha over the existing funds or maybe index, then it makes sense to go for a sectoral funds. Having said that, yes, Kavita, there are a slew of sectoral funds which have come out, and they do look attractive to me. Because if we talk about what's the first growth driver for the markets and for the economy, looking at that, maybe we can pick a few of the sectoral and thematic funds that are available at the moment. Top of the list would be a Bandhan Financial Service Fund. It's a banking-based fund, and then I believe banking sector and NBFCs are scheduled to do well in the coming times. So that is one fund that definitely should be on your radar. If you are looking at manufacturing, as Make in India is a big push from the government, and we are seeing good traction in the manufacturing sector. So Quant Manufacturing Fund is also something which is looking very attractive. They have a decent exposure to a lot of these manufacturing sectors, and it's a good mix of exposure to these sectors. To talk of them, they have pharmaceuticals, they have power generation, they have iron and steel, they have refineries, they have medical equipments and supplies. And mind you, Kavita, there's a government's push as well as far as your insurance is concerned. So these medical equipments and supplies will see a push as well. And power generation, as we all know, we are pushing towards more cleaner and greener energy. So power generation is something that will see a good push. So manufacturing fund is something which looks attractive. One should definitely look at. Manufacturing fund. Innovation fund is also something that is an interesting bet, because if we look at the way a lot of these fintech companies are now coming up with IPOs and they're getting listed, e-commerce companies are there, then your retail is there, auto components are there, a lot of EV players are there. So Nippon India Innovation Fund is something which has catched my eye, and that definitely looks attractive. They have an exposure to private sector banks, auto components, retail e-commerce, two-wheelers, financial fintech that we call technologies, so they have exposure to that as well. Then how can we miss an IT fund? Because that has been always the growth driver for the economy. And Tata Digital Technology Fund is something which definitely stands out. And if anything, we look at the way the IT indices have been moving around for the past 2 weeks, I believe technology fund should be on your radar. So the top sectoral funds for me would be a gamut of entire sectors, so that if you take exposure in these sectors, you are well covered and diversified as well, Kavita. So a financial service fund, Bandhan Financial Service Fund, a Tata Digital India Growth Fund, then you have Quant Manufacturing Fund and Nippon India Innovation Fund.
All right. Now, talking about these are topics that you presented, but then having said that, tell us something about the existing funds of these categories. How have they been performing, and why do you think it's a good pick for an investor to go for an NFO if at all there is an existing fund of the same theme or sector?
Kavita, to be honest, you don't get an advantage by investing in an FO, very honest. Rather, if given a choice, you would want to invest in a fund which is already existing there for at least 1 year to about 2 years, because then you get a good look at their performance for 1 year, 2 years, or maybe if they're listed there existing for 5 years, you can see the performance. Whereas these NFOs are concerned, you hardly see 3 months to about 1 month performance. Most of them so far have done well, the ones that I've spoken about. But to be honest, NFOs don't give you any extra advantage over and above your existing mutual fund schemes which are there. So that myth that you should put money in an NFO just because the NAV is trading at 10, that is wrong. And plus, the expense ratio is slightly higher if you invest in an NFO. So to be honest, NFOs don't give you advantage, just that these funds, some of them are new and innovative, and maybe they give you an exposure to the sectors which otherwise most of these schemes and mutual funds don't give you an exposure to. And they are the pillars of the economy, which are now coming in the forefront. So which is why I've selected these NFOs. Apart from that, to be honest, NFOs don't give you any extra advantage over existing schemes.
I think that's a good roundup that you gave on how should one go about if they want to put money in NFOs. Thank you so much, Aditya, for being on the show and helping our viewers with this today.
Pleasure, Kavita.
Time for a quick break, but post that, let's get your mutual fund portfolio queries answered. I'll be joined by Pankaj Matwar after this break. Back, you're watching The Money Show with me, Kavita Thapliyal, and there are a lot of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have Pankaj Matwar, MD, Optima Money Managers. Also, do not forget to send us your portfolio queries, and you can WhatsApp your questions on 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Hi, good evening, Pankaj, and welcome to the show. Let's move to our first viewer online, Prasna from Pune. Hi, Prasna, good evening. How are you doing?
Good evening. I'm doing fine.
Thank you so much for sending us your question. I believe you want to invest 20 lakhs in mutual funds for long term, and the kind of return that you're expecting is 12 to 15% over 5 years.
Yes.
All right. So your focus is... Sure.
Yeah. My query was basically, I have been investing for the last 1.5 years now.
Okay.
And I have already invested 30 lakh rupees in some flexi cap funds, mid cap funds, and some focused equity funds. More of them are into flexi caps. So,
Right. So you have... So just to cross check, just to verify, I think you have Motilal Oswal Nifty 50 Index. This is your fund? That is the recommendation, I think. Okay. So, Prasanna, could you please tell me the fund's name?
It is Bajaj Finserv Flexi Cap.
One second.
Large and mid cap.
Bajaj.
Vital Capital.
Okay, I'm also noting down your fund's name so that I can discuss about them with Pankaj. So it's Bajaj Finserv.
Yes.
What category
Nippon
fund?
India.
No, Bajaj
Nippon
Finserv.
India.
Bajaj Finserv, what category fund?
Flexi cap fund.
Okay. Next is?
Canara Robeco Flexi Cap.
Okay. And?
The Nippon India Focused Equity.
Okay.
White Oak Capital, Flexi Cap, and Multi Cap.
Okay.
Kotak Multi Cap.
Okay.
That's all. I mean, I have put in around 30
You should
lakhs
have
here.
sent us these funds details. It would have been really helpful for our expert also to give you the right kind of plan. But anyways, now since you've given the names, anyways, let's just not spend more time over this now. Is there anything else? Because then I need to move on to Pankaj.
Yeah,
Then we can start your financial planning. Yeah.
ICICI Pro Mid Cap.
One more you're adding. Okay.
Yeah. These are my current investments, okay?
And how much are you investing?
These are my current investments as of now. It is 30 lakhs.
All lump sum?
All majorly SIP, some lump sum.
What is the SIP amount?
650,000 per month.
50,000 per month SIP amount and lump sum?
I had invested 1.5 years ago, which was around 10 lakhs.
So the total portfolio value right now is 30 lakhs invested.
Correct.
Got it. Pankaj, I'll come to you now. Okay, so some clarity we have. Bajaj Finserv, so he has a lot of flexi cap. There is Bajaj Finserv flexi cap, Canara Bank flexi cap. He's got White Oak flexi cap, Kotak multi cap, White Oak multi cap, Nippon India focused. He's got ICICI Pro mid cap. 50 lakhs SIP going on, 10 lakhs invested in lump sum in these funds. Overall invested amount is 30 lakhs so far.
Kavita, good evening. Prasna, the funds which you have in your portfolio, most of these funds are new funds. Means they don't have a long-term performance history. These are like a few months to a few years old, except only like ICICI Prudential Mid Cap Fund or Nippon India Focus Fund. Other funds are very new funds. Second thing, as you mentioned that you have invested mostly in Flexi Cap, though as of now we see that Flexi Cap funds have major allocation in large cap. But they have flexibility to invest across the market caps. So you have to see that for how long you want to stay invested in these funds. If your investment horizon is not very long, then you have to be little cautious about this, because like you have one multi-cap fund in your portfolio. A multi-cap fund has to allocate minimum 25% of its asset in small cap stocks as well, 25% in each market segment. So it becomes riskier when your investment horizon is not very long. Now you want to invest further 20 lakh rupees for 5 years. I wanted to suggest you some large cap funds, some large cap index funds, or multi-asset allocation funds. But the thing is, after listening to you, I have learned that you have many funds in your portfolio. So don't add new funds. What you can do, this 20 lakh also you can add to your existing portfolio, because you have flexi cap funds mostly. So in these funds only, like White Oak flexi cap fund you mentioned, you can add some amount to that. Even that Bajaj Finserv flexi cap fund was a new fund, but I expect that it would do good because the fund manager is good. So you can even allocate in that fund also. So in your existing portfolio only you can add. But yes, still, if you want to add a large cap fund, Motilal Oswal Nifty 50 index fund you can consider. It's an index fund. So if Nifty moves up, you will get benefit out of that.
All right. We move on. Let's take other question now. Rahul Kaushik from Hyderabad is on the phone line with me. Hi, Rahul. How are you doing?
Hi, ma'am. I'm good. Thank you.
Thank you so much for sending us your question. And you want to know the best mutual funds to help you arrange your corpus to buy a house. What is the amount of your house that you're looking at?
I want to make sure that down payment is minimum 20%. So looking at around 25 to 30 lakhs of down payment.
25 to 30 lakhs down payment. And within how many years?
8 years. 8 years.
8 years. And how much are you willing to invest?
Around 30,000 per month.
30,000 from now, 8 years, 25 to 30 lakhs. All right, got it. Pankaj.
Yes. See, Rahul, because you have decided how much amount you want to accumulate, and 8 years is the investment horizon. So I'll suggest you 3 funds for 30,000 rupees. One is ICICI Prudential Multi-Cap Fund, which invests across the market segments. Then Parag Parikh Flexi Cap Fund, and also Motilal Oswal large and mid cap funds. So 3 funds and 10,000 each fund you can invest.
Rahul, is there anything else you want to ask Pankaj?
No, actually, I am currently investing one more fund that is the started out PGIM Indian Mid Cap Opportunities Fund. So that one, should I continue in that investing?
So you already have PGIM mid cap opportunity.
Yeah.
Okay.
Yes.
So Pankaj, should he be continuing?
Yeah, you can continue with this fund.
Okay.
It's a mid cap fund and your horizon is 8 years, so it suits you.
Let's move on and let's take this question via email. We don't have the caller's name. We don't have the person's name that's been sent us. Okay, so I have the question. Sunil from Rajasthan. Let's take Sunil's question. He is recently retired and wants to invest 40 lakhs so that he can have SWP from his mutual funds. So which funds would be ideal for him?
See, to invest the retirement corpus, I would have hybrid funds in a portfolio. So first I'll suggest the scheme name and then I'll mention something beyond that. First thing is when you want to do SWP, so as I said, the hybrid funds. So there's a category called balance advantage or dynamic asset allocation, and it can be ICICI Prudential Balance Advantage Fund, Mirae Asset Balance Advantage Fund, and HDFC Balance Advantage Fund. But Kavita, most important thing when you invest in these funds, because these funds will also allocate some part of the corpus in equity. So whenever investors, they want to invest in hybrid funds, this kind of funds, they should not start SWP immediately from these funds. They should invest, wait for a few years, and then they should start SWP. Second thing, for the first few years, they can manage the cash flow through some debt-oriented funds or some other fixed income instruments. But whenever you invest in these hybrid funds, even, you should wait for a few years. Second thing, right now, because markets are at a very high level, so I'll suggest that instead of investing the whole amount in one lump sum, you should invest in staggered manner. So one is staggered manner. Second thing, that SWP should be started after a few years. That is my advice.
All right, let's move on to our last question also. We don't have the name of this caller, but the caller says that they want to do an SIP in mutual funds for the next 5 years.
Considering the investment horizon of 5 years, I'll suggest 2 funds. One is ICICI Prudential Large and Mid Cap Fund, Motilal Oswal Large and Mid Cap Fund, and Access Growth Opportunities Fund. So mostly I'm suggesting here large and mid cap fund. I'm skipping small cap fund because the horizon is only 5 years.
These are the questions that we had for you today, Pankaj. Thank you so much for being on the show and helping our viewers with their financial portfolio queries. On that note, it's time to sign off. I'm going to leave our viewers with our WhatsApp number and email ID where you can keep sending us your questions. Thank you so much for watching. Goodbye.